What's up, everyone? Welcome to the daily macro update for Monday, September 29th. Taking a look at the macro data for today, as well as the title of this video. The market is awaiting this government shutdown that might potentially happen. At the timing of this recording, we've had different people come out talking about the probabilities of this. Places like Polymarket or Kalshi has this at a 74% chance of a government shutdown. Jim Bianco also, tweeted out that it was around 83% of a government shutdown, but, doesn't really matter, right? Now, this government shutdown potential is not due to any type of debt ceiling agreements, right? So if you remember earlier this year, there was like the whole default risk due to the government not being able to be funded for the next fiscal year with the debt ceiling. This isn't what, this shutdown is about at all. Congress, they already have the money. What this is about is how are they going to exactly spend it and appropriate it. And so, really the last time that this happened was all the way back in 2018, specifically in December 2018. Now, if you go back and take a look at the market, there was a little bit of a disruption there. Let me see here. Let me go ahead and bring up the S&P 500, and we'll go back to 2018 here. So if you guys remember this, they called this shutdown. I forget what they nicknamed it, but it did have a decent disruption. Here you can see it right here, right? So you had a pretty decent sell-off from the markets even before that. But then, as the government shutdown happened, it had about a 14% correction, which lasted about a couple weeks, right? It was about 35 days. There was another notable one back in 2013, and then some of the other ones have been shorter. This one specifically was a lot longer. And so, you could see potentially higher volatility. And if a government shutdown does happen, the other issue is that we will not have the September data for the labor market, right? So the BLS has already came out saying that if the government does indeed shut down, then they will not be able to publish their jobs data, right? We'll still get some of the private data reports, like the ADP and others. So, I mean, it's not like we'll have complete blindness when it comes to the labor market. We just won't get any type of government or BLS data, right? So, yeah, when it comes to this, these government shutdowns have been relatively short-lived. There could potentially be some higher volatility. The worst one was this one back in 2018. But it's very unlikely that that'll happen. And, typically the markets are able to, look past a lot of these, right? Now, it is interesting how this is happening as the markets continue on with their crazy acceleration here. But yeah, I mean, it would kind of coincide with this potentially having a little bit more of a correction. So we'll see what happens from here. But, as we discussed last night's Sunday macro wrap up, is that right now we're in this environment where bad news is good news. And so any type of strong economic data or better than expected labor market data that could actually push up yields even higher, as well as the dollar, which would definitely cause a further sell-off in the equity markets, right? And so also too, if no labor market data comes out for the month of September this week, then with a Fed being data dependent, they would probably continue cutting rates, right? And so again, if they're not able to provide that data, it could also be seen as a positive. And then of course, if it comes in at expectations or below expectations, that would also accelerate the market. So, 3 out of the 4 different outcomes are actually positive for the markets, right? So, 75% chance that you could continue to see more of an upswing this week. But, we'll see what happens, Taking a look at some of the other economic data for today, we saw a little bit of a contraction in the Texas manufacturing numbers here. We also had a rebound in the pending home sales numbers for the United States, which makes sense. due to the perceived outlook of rates coming down, right? So you're seeing a little bit more in pending home sales. But yeah, when taking a look at the Dallas Fed Manufacturing Index, that did have a decent deceleration to levels back to where we were back in June of this year, right? So some of the other metrics that I like to look at within this, going back, you can see that this has pretty much been negative since mid 2022. And so, the manufacturing sector pretty much continues to struggle. And what's interesting is that, when you take a look at government deficits, right now, the government is doing record deficit spending. There really is no change between Biden and Trump in terms of government spending, which is the whole reason why the market is propped up and why, it seems like things aren't getting any better. And it is concerning to see that the manufacturing as well as services sector remain suppressed or, stagnant with all of this essentially steroids being injected into the market with the government spending the way that it's doing. So, yeah, the whole thing earlier this year with like Doge, as well as, the whole thing with Trump, trying to cut back spending, that's not happening at all. It's pretty much a continuation of before. And, that government deficit spending, uh, coinciding with the markets, it's one of the biggest things that's driving it right now. And so, any type of what the government is hoping to do right now is that they can continue their government spending, their crazy spending in a short term, on a short term basis, right? So what they want is to see rates actually come down while at the same time real economic growth starts to improve. And they're really just trying to spend as much money in order to keep it putting along until that happens. The only thing is that with the amount of spending that they're doing, it is also propping up inflation. That, along with tariffs, also contributing to a large acceleration in goods inflation, it's not really helping out the case for what the government wants to happen. So, definitely interesting seeing that there. When we take a look at current prices paid for raw materials for Texas manufacturers, you can see that still remains pretty much at the same levels that it's been over the past, 5 months or so, and a lot larger than where we were back at in June of 2023, which is where it bottomed at around 1.0, whereas right now the index is at 43.4. So pretty large acceleration in terms of the input prices that manufacturers are paying, and ultimately that gets pushed to consumers, right? The whole thing with tariffs is that it is a form of taxing. And so, it's essentially raising taxes without calling it raising taxes, right? The Democrats actually raise the regular tax bracket rates that we all pay. And then, Trump, instead of raising our personal taxes, he's raising the cost of, imports, right? So it's just another way of increasing taxes, but the long way. So yeah, a lot of these manufacturers continue to get their margins squeezed. So that is what we're seeing there. Let's see. When we take a look at the Fed, the target rate probabilities for a Fed cuts in the month of October. Hold on one second. Let me go ahead and let this load here. I don't know why my computer has been, I must have way too many tabs open right now. But yeah, so taking a look at the target rate probabilities for the October 29th Fed meeting, there's still, nearly a 90% chance that they're going to cut by 25 basis points and a 10% chance that they're going to pause where they're at right now. Unless you really saw a super hot labor market number as well as a super hot inflation number at the same time, then you're probably not going to get a pause, right? They're probably going to continue cutting despite, inflation remaining sticky. So, I wouldn't be surprised if markets just continue higher from here, from now until the end of the year. And so, that, as well as at the same time, a lot of the people who were bearish over the past several weeks, which is the majority of retail traders, now once those bearish retail traders are finally capitulating their bearishness, and they're like, all right, well, it looks like the market is going to continue higher. That could even, continue to, boost that whole entire melt up that we're seeing right now, right? So yeah, I don't really see anything other than an incredibly hot inflation number and an incredibly hot labor market data, if we get it from the government shutdown, would cause this to have a pretty large decline. We'll see what happens with all of this, but if we continue to have the dollar decline from the top end of the trading range that we're seeing, as well as bond yields continue lower, then that would be a pretty good week in the markets, right? So we'll see what happens with that. When taking a look at the current yield curve, you did see a little bit of an acceleration from the rates here. Comparing this from 3 months ago, it's still close to where it was, a little bit downward compared to 6 months ago. We are seeing a steepening, and that's mainly due to the fact that the long end of the curve has been rising a little bit, and the short end of the curve has been lowering. So um, this is what's called a bull steepening on a 6-month basis. And then compared to an entire year ago, what's interesting is that compared to this time last year, the 2-year yield is pretty much in the same exact spot, almost identical, right? And then what we've really seen is a large acceleration year over year on the long end of the curve. And because growth has pretty much remained stagnant, you can see that the bond market at least, has been pricing in much higher inflation over the long run, right? And so, yeah, as we've seen at the previous Fed meeting, how Jerome Powell basically was like, "Oh yeah, we still have our 2% goal, but we keep pushing it out 2 more years from now." It's like every single time they go on TV, they're saying, "Oh, it's 2 years from now. It's 2 years from now." And this is what has caused the market to believe that they've just completely ditched their 2% target, which is what looks like it's happening right now. But yeah, when it comes to some of the best performers here today, Japanese yen versus the dollar is having a little bit of a move. Bond prices are having a decent acceleration here. So things like SHY as well as IEF, those are having a decent acceleration. TLT having a big day, right? So TLT is looking bullish there. The volatility index of the S&P remains relatively low. Bond volatility remains relatively low, or really low actually. And then we're continuously seeing an acceleration in industrial metals as well as some of the precious metals, right? So copper, gold, silver is just on a mega tear right now, as well as gold. So yeah, those things look like they're not slowing down at all because again, with the government spending as much as they are, there's been a huge flee to hard assets, right? As well, there's typically a large migration over to hard assets when military conflict is also going up, right? So I know that today it was Trump and Netanyahu went on TV today for a quick press conference declaring their Department of Peace. I don't know if you guys saw that. Apparently, they're going to come to some type of deal to stop the Gaza war. We'll see if that happens. It all depends if Hamas actually accepts the offer. If not, Netanyahu is pretty clear that they're just going to continue the war. And so if that happens, you could see even more of a flee to hard assets. I know that over the past couple years since the pandemic, there's been a huge accumulation of gold from the major central banks across the world. So this gold accumulation is not just retail, it's mega institutional as well. So I mean, it's interesting seeing these huge central banks shore up their gold to levels that they really haven't seen since World War II. Um, but we're not putting any type of tinfoil hats on ourselves right now. But it is interesting just noticing that as that continues there. Oil remains in bearish trend. Bitcoin having a little bit of a bounce here to the top end of the trading range. Same with Ethereum. Ethereum is in bearish trend currently. Bitcoin is in neutral trend. Solana also having a bit of a bounce here. So Looks like it's having a little bit of a recovery from the bounce that it had last week. And then, yeah, continuing acceleration from risk on assets like QQQs and the SPY. If we take a look at the trading range for the S&P 500 ETF SPY, you can see that it's not quite at the top end of the trading range, but you did have an opportunity on Thursday last week to buy on that dip, which proved to be the right move. Now you have this week to sell some into strength. So pretty much anytime the SPY has gone down to the low end of the trading range in our model, it's been a great buying opportunity, and it's been like that really since the middle of May, from when our model actually went bullish on the S&P, right on May 13th here, right? So if you guys go back to the videos from a few months ago, you can continuously see that we did not change the color of the bookshelf in the background, which for those of you that are new to the channel, that represents the trend of the S&P 500. So whatever the bookshelf color is, that's the trend of the SPY. And it's been green, pretty much since mid-May, while it's been going on a 14.56% run up. So hopefully you guys have been paying attention to the videos and enjoying that there. And so, yeah, I mean, I don't really see anything disrupting this trend, unless, again, you had the combination of a very strong jobs report and then in a couple weeks having a very strong inflation report. We'll see. Could happen. But it's just not what is the highest probability right now. So, but nevertheless, though, this is a good time to sell a little bit as it gets to the top end of the trading range. If we take a look at volume here, looks like volume has been coming down a little bit recently, so that's definitely interesting. As this has a pop on lower volume, that's a bearish divergence, so that would be another key indicator to sell some into this strength here. So someone asked if I am de-risking into the possible market shutdown. Not necessarily. I mean, mainly I'm just following what the model is saying. But typically when we get into these major weeks like labor market data or inflation, I typically like to take some profits on things that have been paying out, pretty nicely. One of the assets that we've been talking about in our group, pretty much over the past, we've been talking about this really since June, but Robinhood, this had a bit, bleh, can't talk. This has had a pretty big acceleration today, ever since we were talking about it in our group back at the end of August. It's up 32%, right? So the financial sector, doing well as well. But this is just one of the many assets that would be great to take some profit on, since it's making new all-time highs, right? There's plenty of these that are happening, so it's not just with the financial sector, but yeah, as you can see here, tech, discretionary, financials, what else? Yeah, the only thing I was buying today was some energy stocks that were having a little bit of a correction. So yeah, that was the only sector that had a red day today. And I always like to buy things on red, but it's also important to note that typically what happens towards the end of the quarter, right? So tomorrow is the last day of the third quarter. Typically you have these types of markups before, you could potentially have a little bit of a kick up in volatility after the quarter end, right? So tomorrow is the last day of September, and then Wednesday officially kicks it off on October 1st, which is also the potential, of a government shutdown. So, I wouldn't be surprised if we do see some short-term volatility into that. But yeah, that's pretty much what I'm seeing here. And so with that, we can go ahead and get into some questions. If you guys have any type of tickers that you want me to pull up on the charts here, just leave those in the comments below. We'll pick a few. And then, yeah, let me go over some of these questions here. Is copper bullish in your model? No. Right now, copper is neutral, but, I wouldn't be surprised if it does go back to a bullish trend here soon. So yeah, but it's definitely getting there. That's for sure. It has had a pretty decent stair stepper way up since this large decline on July 30th, and yeah, it does appear to be accelerating faster, which is always a good sign on higher volume for the asset. Is natural gas neutral now? Are you referring to a specific ETF? Because when looking at N gas, this is still in a bearish trend. If we take a look at UNG, it is also still in a bearish trend. So yeah, UNG, the natural gas ETF that my team and I prefer, this would have to do a little bit more work in order to get back to a neutral trend as well as a bullish trend. Good question, though. Report comes out this Friday. Yeah, so the BLS jobs report does come out on Friday. But the BLS has stated that if the government does shut down, they will not produce that jobs report, which doesn't make sense because they already have all the data. So I don't know why they would just hold that back, but whatever. CRDOBE. Sure, we can take a look. Credo Technology Group. Not sure what this is. It is close to the low end of the trading range. So, yeah, interesting there. BE. Let's see. This one is right in the middle of the trading range. So, 1 second. All right. Curious about BB. Sure. BlackBerry. Yeah, pretty large acceleration. Close way above the top end of the trading range. So, something that is definitely in a bullish trend, but, would not be trying to chase this. Looks like earnings reported on Friday. So, yeah, it's having a nice little reporting acceleration. But, yeah, I mean, this is something that is in a clear bullish trend. But again, I would, according to our process, we don't like to chase things that have already gone up a lot like this. So if you missed it, then, you're going to have to wait for a consolidation according to our process. RXRX. Pharmaceuticals. Well, this is something that's definitely in a bearish trend, so it wouldn't even be on the list. Pharmaceuticals in general, I know that they've been having their problems. Interesting though. XPH S&P Pharmaceuticals ETF is in a bullish trend though, so hmm. Looks like it's at the top end of the trading range currently, but so it wouldn't be buying this, but yeah. XPH would be the ETF to look at. Let me see what's in here. Holding is CRNX. Jeez, my computer's going slow. Whoa. Yeah, looks like this one has had a pretty large acceleration. CORT. Yeah, it looks like there's a few pharmaceutical companies that are, having a decent acceleration here that are also in a bullish trend. So I wouldn't say the entire pharmaceutical sector is in a bearish trend, but that one that you had shared is definitely not in a bullish trend. So you guys saw how I did that though. You look at the ETF and then you look at the top holdings. You take a look at some of the stocks that are in the top holdings just to see, and you make your determination from there. But always got to look at what's actually in the holdings of the ETFs. Some people just buy the ETF and they don't even look what's in there. I don't get it. QBTS. Yeah, a lot of these quantum computer stocks have been performing well and are in a bullish trend. Yep, bullish trend as well, but just not near the top end of the range here. Yeah, I mean, if you guys are suggesting things that have just had like an enormous, acceleration in price or anything like that that have been going up for a while, they're probably in bullish trend in our model. It all just depends if what I like and what I would want to know from you guys, if you guys had any other ideas. I mean, we do have our screeners that point out a lot of really good opportunities, but if something is, here's like the perfect setup that our team looks for. Something that is bullish trend, that is, having a price correction to the low end of the trading range on lower volume, right? So those, as well as on decelerating volatility. If you have all of those at the same time, man, that's a great starting point to look for a buying opportunity. Again, you also have to take a look at the macro and see if that specific sector is in a macro favorable environment. But it's a great starting point, and that's really where our team really looks for things, is if those condition sets are met. And again, a lot of you guys can do this, on your own. But if you'd like to see the exact selections that my team and I have based on that, and have us do the work for you, that's why we have our macro investing community. Appreciate the likes. What about FUTU? Not even sure what this is. Yeah, it looks like it's in a bullish trend. Yeah, someone asked this on TikTok. But all right, we're approaching 4:15 here. Again, with the government shutdown, pending on Wednesday, we'll see if that happens. I do still think that it would be more of a nothing burger, but who knows? We'll see what happens. Could be wrong, but that's just what I'm looking at in terms of what has happened in the past. It'd be a little bit different if there was like an impending government shutdown and the market was already in a bearish trend. But we'll see what happens from here. Hopefully, it's able to be averted so that we can just continue on with the labor market data. Or it could be, part of the ways that, the market kind of continues on with their rate cutting regime is that they purposefully do a government shutdown so that the labor market data doesn't get released That would probably be funny, and I would not be surprised if that happens. But I don't want to be a conspiracy theorist, but that would be very convenient, and it wouldn't be something that would be foreign to the government doing that sort of thing. But all right, everyone, I appreciate everyone for joining, and we will catch you in tomorrow's daily macro update. Bye, everyone.